The dinar daily and what unfolded today is a moment that many once believed would never arrive. Around the globe, in trading hubs from New York to London and from Dubai to Singapore, financial terminals revealed something that instantly commanded global attention. Two currencies long discussed, doubted, and debated stepped back into the international arena. The Iraqi Dinar and the Vietnamese Dong appeared on major foreign exchange platforms, marking a turning point that has echoed through markets and institutions worldwide. What was once speculation became a verified global development. Those who monitored this topic for years felt a quiet shift turn into historic confirmation as the financial world paused to absorb what had happened. It was not simply a currency adjustment, it signaled that a long cloud of uncertainty had lifted, and something extraordinary had begun to take shape before the world's eyes. In the earliest hours of the day, before most markets fully awakened, subtle movements began appearing on private trading screens. Observers in London were among the first to notice irregular activity, with minor currency windows flickering in ways that did not match typical patterns. A moment later, a symbol appeared that had been absent from international trading for years: the IQD pairing. At first, market watchers were unsure if this was a glitch or an internal test. Yet seconds later, similar movement occurred involving the Vietnamese Dong. The sudden visibility of both currencies created a ripple of confusion, followed by intense focus across trading desks. What seemed like brief flashes quickly became confirmed entries. Those early signals sparked silent anticipation in global financial spaces, as experts realized something significant was unfolding. As time moved toward dawn across major markets, communication channels ignited with urgency. Private trading rooms exchanged messages at a rapid pace, phones rang continuously, and analysts who had spent careers watching global currency trends paused in disbelief. By approximately 4:15 a.m. GMT, credible confirmations began circulating among financial institutions. The Central Bank of Iraq had officially restored its currency to international trading mechanisms. Just moments later, Vietnam aligned with the same move, creating a rare simultaneous re-entry of two national currencies into global foreign exchange systems. The atmosphere shifted from rumor to certainty, and the implications of what had occurred began spreading to policymakers, economists, and banking executives worldwide. As the news moved through capitals such as Washington, global agencies initiated coordinated responses. Experts across government, banking, and international finance stepped into rapid consultation. What many inside global finance had monitored quietly for years had now transitioned into real-time market visibility. Shortly after the initial confirmations, public foreign exchange platforms began updating their data feeds. By 4:37 a.m. Eastern Time, both currencies were fully displayed across global trading interfaces. According to live feed figures at that moment, the dinar appeared at a rate equivalent to 3.91 to the US dollar, while the dong reflected an adjustment around 0.47. There was no speculation, the numbers were visible, verifiable, and accessible to public markets. Reaction across global communities was immediate. Digital platforms experienced spikes in traffic as observers sought real-time updates. Social channels discussed the development intensely as trending hashtags emerged worldwide related to the currency updates. Discussions ranged from cautious analysis to emotional reaction from those who had followed the currency narratives for years. In regions such as Dubai and Singapore, where high-value clients monitor global currency shifts closely, institutions reportedly reassessed strategic positions as early morning markets opened. The magnitude of the development created a wave of response across individuals and institutions alike, signaling the beginning of a new chapter in global monetary dynamics. Across Iraq, the moment carried deep emotional weight. In Baghdad, Local institutions that had quietly prepared for such a development began serving early visitors. Families and individuals brought dinar notes saved for years. On the streets, expressions ranged from quiet pride to tears as individuals reflected on a long period of national challenge and resilience. A citizen outside a bank spoke about enduring periods of doubt and maintaining belief that their currency would one day reclaim international standing. The event represented economic recognition, but also a larger symbol for many who lived through decades of transition, conflict, and rebuilding. For them, this milestone was not merely financial, it was historical, personal, and rooted in national identity. Meanwhile, in Vietnam, the development unfolded with deliberate order and structured communication. The State Bank of Vietnam announced alignment with global trading systems and assured citizens of a smooth and coordinated rollout. Major branches experienced heightened activity as individuals sought to exchange or validate their currency positions. People gathered outside banks in major cities including Hanoi and Ho Chi Minh City, while officials emphasized calm, continuity, and confidence in national monetary planning. For Vietnam, this shift represented economic progress anchored in years of growth, reform, and global integration. It reaffirmed the country's position as an emerging force in regional and global markets, reflecting both stability and ambition. Behind the visible developments, large financial institutions executed processes long prepared for. Banks such as HSBC, Chase, and Deutsche Bank activated systems associated with internal global currency readiness protocols. One such mechanism, described within financial circles as a contingency model for reactivating formerly restricted currencies, reportedly took effect. While much of that infrastructure had been quietly developed and tested over time, its use today signaled coordinated international planning. Under oversight from global monetary organizations, such structures aimed to maintain market balance and ensure orderly liquidity movement. The implementation demonstrated that major financial authorities anticipated the possibility of such a moment and had frameworks prepared to support stability. Global analysts then began examining wider economic meaning. Observers noted that while dominant currencies had long driven most international trade, new dynamics were now emerging. Iraq's currency return symbolized sovereignty and regained standing after years of rebuilding. Vietnam's currency shift represented the growing strength of Southeast Asia's economic landscape. Together, the developments indicated a gradual diversification in global monetary power. Economists pointed out that financial influence increasingly reflects broader global contributions from natural resources to industrial output, and today's event highlighted that evolution. As new financial participants stepped forward, long-standing currency hierarchies adjusted to reflect a world that continues to expand in complexity and balance. Inside the United States, banking procedures reportedly moved quickly. Individuals known to hold positions in the newly active currencies were contacted through private channels. Certain exchange facilities in key U.S. states initiated controlled operations under heightened security measures. While exact details varied by location, observers described orderly but emotional scenes as long-time holders approached formal exchange environments. Private banking divisions implemented codes and procedures historically reserved for institutional clients, reflecting the unusual nature of the event. For many individuals, the moment represented the conclusion of years of waiting and the beginning of new financial realities governed by formal compliance and structured process. International banking centers such as Zurich, Geneva, and Hong Kong also saw increased activity. Private wealth managers and market specialists engaged in rapid information verification, guiding clients through early data and regulatory updates. Some analysts compared the global sentiment to the moment, a long anticipated economic shift becomes visible, with liquidity patterns adjusting quickly and trading desks recalibrating positions. The IMF then issued an official statement acknowledging the reinstatement and commending both nations for fulfilling international requirements. In doing so, it reinforced the legitimacy and coordinated nature of the development, emphasizing compliance and signaling confidence in continued stability. Reports later suggested that behind the scenes, numerous systems had been undergoing phase testing in the weeks leading up to this moment. Selected banks had received encrypted updates while international transfer networks prepared for potential reactivation of dormant currency infrastructure. Simulation environments modeled various market responses to ensure controlled adaptation rather than volatility. These details reflected extensive planning and highlighted that the move was designed to be steady, structured, and globally coordinated rather than abrupt or unstable. In economic terms, it represented a major event executed with methodical precision under international oversight. As global celebrations and formal responses continued, policymakers in key capitals held strategic discussions. While some economists highlighted potential volatility or adjustment periods, others viewed the development as a sign of longer-term equilibrium and diversification. What became clear was that international currency landscapes were expanding, reflecting broader participation from emerging economies. The move represented a shift toward a more multifaceted global monetary architecture, one shaped by shared economic contributions rather than reliance on a limited number of dominant currencies. In Iraq, official messages emphasized national resilience and renewal. The central bank released a statement acknowledging the perseverance of its citizens and their commitment to progress. Across the country, symbols of national pride accompanied the announcement. The dinar's return to global trading systems carried not only financial significance but deep emotional meaning for a population that had endured decades of challenges. For many, the moment represented acknowledgement of the country's path from conflict to recovery and modernization. It conveyed a sense of restored dignity and optimism about future economic participation. Vietnam's leadership delivered a message focused on confidence, stability, and national development. Officials expressed pride while emphasizing continuity and assurance for citizens. Social media captured individuals celebrating the moment. From young people sharing images near banks to older generations, reflecting on decades of national progress. The transition was framed as a reflection of Vietnam's increasing sophistication and the successful execution of long-term economic planning. It stood as evidence of the nation's continued integration into global financial structures and its strengthening presence on the world stage. Markets reacted rapidly. In London, companies tied to Iraq's reconstruction and energy sectors experienced substantial movement. In Tokyo, firms associated with Vietnam's manufacturing and export industries surged as investors reevaluated economic strength indicators. Commodity markets, including oil and gold, experienced fluctuations as traders recalculated expected shifts in global currency ratios and capital flows. The correlation between geopolitical economic development and market adjustment became visible in real time, highlighting the interconnected nature of modern global finance. In the United States, government officials reportedly held coordination discussions to help guide public narrative and reinforce stability. Financial experts suggested that rather than restricting information, authorities allowed details to emerge organically while ensuring clarity and calm. Confidence was emphasized as the central priority, supporting a smooth transition as markets absorbed the new developments. The approach illustrated the importance of communication in managing historic financial moments, demonstrating that stability is guided not only by numbers but by clear and measured messaging. Online, individuals shared personal stories connected to this event. Many posted photographs of currency notes they had held for years, reflecting the emotional connection some felt toward the moment. Comments expressed relief, validation, and pride, particularly among those who believed in the possibility of international reinstatement, despite long periods of uncertainty. For many, it represented a moment where patience intersected with historical change, making it as much a personal milestone as an economic one. Within some specialized U.S. exchange channels, heightened procedures were observed. Certain participants described structured processes including security protocols and private appointments to manage conversions. Reports referenced non-disclosure agreements and controlled rate categories, though such operations remained within regulatory boundaries and varied across locations. The environment was described as highly organized, reflecting institutional alignment with formal banking standards and compliance expectations. It underscored the seriousness and legitimacy with which financial entities handled the development. In Iraq, national leadership addressed the public with messages of pride and unity. The Prime Minister referenced sovereignty, recovery, and the nation's future direction. Citizens gathered in public spaces, celebrating a moment they viewed as symbolic of a new chapter. Fireworks illuminated cityscapes, voices filled streets, and a collective sense of accomplishment resonated across the country. Years of sacrifice and rebuilding culminated in a symbolic return to economic recognition and independence. Vietnam's official message highlighted calm confidence and national purpose. Leaders emphasized that the transition was part of a carefully structured progression and encouraged citizens to move forward with trust in the nation's institutions. Public reaction reflected pride and a sense of shared achievement. Both young and older generations experienced the moment differently, one looking toward future potential, the other reflecting on decades of transformation. For many, the currency reintroduction signified Vietnam's ongoing rise in global relevance. Analysts around the world referred to the event as a leveling moment in global economics. They noted that while financial systems historically concentrated power in certain regions, today's development illustrated a broader distribution of influence in the international monetary system. Emerging markets with strong growth, strategic resources, and disciplined reforms demonstrated that they could meaningfully participate alongside established global powers. This marked not only a shift in currency trading but a symbolic moment in global economic balance. Banks across continents released guidance as trading continued through the day. Platforms saw substantial increases in user activity, and some retail traders entered markets in search of early positions. Advisors urged caution, highlighting typical volatility associated with major monetary transitions. Yet across both public and institutional spaces, a sense of momentum filled global finance as markets adjusted to a new reality. The day reminded global observers that currency systems, while stable for long periods, remain dynamic and capable of significant evolution. As the day progressed, trading screens around the world remained brightly active. What began as whispers in quiet trading rooms turned into documented reality across global platforms. The transition from skepticism to confirmation unfolded before millions of eyes. Two currencies that had long been subjects of discussion returned to the international stage not through speculation but through official systems and verified data feeds. For many individuals who followed the story over years, it marked the closing of one chapter and the beginning of another. The global economy did not shift through abrupt force or sudden instability, but through measured and coordinated financial structure. Nations rose through policy, perseverance, and long-term planning. What occurred today will likely be studied for years as an example of economic restoration, international integration, and coordinated market execution. For Iraq and Vietnam, it represented recognition, sovereignty, and entry into a broader economic framework. As dawn continued to break across the world, one theme stood clear: The international monetary system had expanded to welcome two returning participants, and global markets adjusted to reflect that reality. The world of finance evolves not in a single moment but through milestones that redefine direction. Today, one such milestone took place. As markets closed in some regions and opened in others, a message echoed quietly but powerfully across institutions and nations: change had arrived. Those who observed history today witnessed an extraordinary transformation, shaped by patience, planning, and global cooperation. A new chapter has begun, and as trading floors quiet and cities rest, the significance of this day remains undeniable.